Hey guys, welcome to this new video. Today is gonna be an interview about building a diversified portfolio. So if you guys are interested into investing, into building efficiently a portfolio by buying stocks, by buying bonds, by investing, for instance, in real estate, but while being diversified, you should have a look to this interview. I'm going to interview Anthony, who have experience and who interviewed more than 50 people working for the finance and investment industries, and we're going to discuss together about this subject. Let's get started. Thanks, Anthony, to accept my interview to discuss today about building a diversified portfolio. So can you start by introducing yourself and tell us to my audience like what you are working on a day-to-day basis?
Yes, Guillaume, first of all, thank you so much for having me on your show. I remember when I was looking to invest in Asia, I actually found your website and I was thinking like, how can I invest in Vietnam? And your advice, really helped me. So thank you so much to start with. But yeah, first of all, for me, I'm still at university, just to put that out there. I'm studying, but I have experience in sales and I have experience in trading, about 4 years experience trading and investing. And where my career really started was I was introduced to Bitcoin and cryptocurrencies. And my friends like, yeah, you definitely have to buy this. It's gonna go up a lot. And I remember buying, it wasn't much, but I bought a little bit of Bitcoin, and the next day it halved in value. and I remember just being like, oh no, but I was hooked. From there, I loved investing, I loved trading. I went from cryptocurrencies to other assets. I sort of moved to stocks, to foreign exchange, to commodities. And that's where I really decided, okay, I want to pursue this path of, investing and trading. So yeah, I'm studying that at the moment. I'm currently working at a fund as well. And I also run the WTF, What the Finance podcast. So what I do there is I basically, I invest people who are experts in investing and trading and all those different things. And I really enjoy it because, it doesn't matter who people are, you can always learn something new, I think. So that's what I'm really trying to do, learn as much as I can from experts all around the world. And, that's what I do day to day. I'm also working with a startup and I do my own trading and investing as well. So, and working for the fund. So it's quite busy, but I really enjoy it. Okay, and can you develop a little bit more for the asset management company, what you are already doing, your market research advice that you give for customers? Yeah, definitely. So it's obviously none of this is financial advice, but it's I work at it's like a boutique fund, so it's quite small. And basically what we do is we invest other people's money. So they're looking. It's only sort of high income investors. I think the minimum is £100,000 deposit, and they want us to invest and make maximum returns, basically. So what we do is we look at the industries that we think are going to grow the most, and it's a lot of it's in the short term, so it's maybe 3 to 6 months. But we look at certain industries, we look at certain trends. We try to have a very diversified portfolio in terms of geography, industry, and different types of companies. And we really look in depth at these companies and look, okay, why are they valued at this price? Are they undervalued? Is there a catalyst? So is there something that we think is going to happen in the next few weeks that will push the price up? What's our hypothesis? So it's really looking at at all these different things and understanding, okay, what is our hypothesis? Why do we think this company is going to go up in the short term? Investing. And then from there, obviously you need to have risk management to make sure if it, because let's be honest, we're not always going to be right. So you need to make sure if you are wrong, minimum losses, but if we are right, maximum gains. And that's really what we do. And, we've done quite well so far this year. And a lot of that has been focused on sort of diversification across geography. So we're quite heavily invested in India because, we see the growth potential there. We are looking to get into other, sort of similar Asian countries like Vietnam. For us, it's just looking at, the brokerage and then getting involved. But, I see lots of potential opportunities in Vietnam and other sort of Southeast Asian countries. Okay, interesting, Anthony. So you have like this mix between maybe technical analysis as well as studying the fundamental of companies. So before we go more deep into building
effectively diversified portfolio. Let's tackle some myths. I may have people who are going to tell me if you invest in stocks, you will lose everything. It's very complicated, and then nowadays you need to have a bachelor degree or even a doctoral degree, you know, to get started. Can you tackle a little bit those common myths that people have, and that finally it's totally not what is the reality in investing right now with the tools and with the information that we have everywhere?
Yeah, definitely. And I would say that like anything, you know, it's not easy to get started. You know, you can obviously make it easier for yourself, but I think investing is so important for your future. Because if you look at, you know, let's say all economies around the world, in the future, it's probably likely that most, you know, there won't be many pensions. A lot of people will have to work until, you know, their 70s and maybe for their life, because we've realized over the past 20 or 30 years that the pensions that potentially our parents and our grandparents were provided with, they're not sustainable. You know, if you look at France, I know they have quite, you know, the pension has quite a massive deficit similar to the UK and a lot of other countries as well. And that's not even including, you know, you look at countries like, you know, maybe frontier countries like Vietnam and Cambodia. A lot of them don't have any safety nets at all. So, you know, it's looking at your future and it's basically your future. You want to look after yourself and you want to make sure that, you know, you're working this hard for 20, 30, 40 years. You want to make sure that you can enjoy yourself when you're older. So I would say that first, it is very important for people to start investing, I think. But a lot of the, as you said, there are a lot of what people think are true. You know, I know a lot of people think that investing in the stock market is gambling. What I would say is, you know, in the short term, this is a famous quote, I think, by Benjamin Graham, who's quite well known. He wrote sort of the Value Investing book, and he was a mentor for Warren Buffett. What he said is, in the short term, the stock market is a voting machine, and in the long term, it's a value machine. So basically what that means is, in the short term, yes, you know, we see examples of, you know, AMC, which has gone right up, you know, GameStop, all these things, they've gone up a lot because, you know, voting, a lot of people have invested in it. But over the long term, what you normally see is, though, you know, and who knows what will happen, but I think those companies will go down in price because the value isn't there. These companies don't actually have, you know, they don't have the fundamentals in place. They're not increasing their revenue. You know, they're not growing, and that is quite a, you know, that's an issue. So what you want to do is, over the long term, you're looking for the companies that should increase in value, they should grow, and they're going to become an integral part of our society. So we've seen that with Amazon. If you think of, especially, you know, I'm not sure in Vietnam, but in the Western world, Amazon it's crazy how important it is for people. So you want to look at, you know, opportunities like that. Another sort of maybe myth that we see is that you can lose all your money, which is, you know, if you were to lose all your money, you know, we have seen it in Asia in the 90s, I guess, the Asian financial crisis, and I guess that may have, you know, scarred a lot of people, because basically what happened is a lot of these stocks, they went down 90%, but that was linked to the currencies. But, you know, if we look at the countries now, you look at Vietnam, it's in a very strong position. It has lots of a very large foreign exchange, you know, amount of foreign exchange. So that means they'll be able to protect their currencies. And, you know, we haven't seen inflation for a while. So I think a lot of Asian countries are in a lot better position now. A lot of them were scarred from that experience in the past, and now they've created an economy where, you know, they're protected. A lot of the countries don't have high debts, even now after COVID, you know, compared to Western countries, they have very low debt to our GDP ratio. So I think that's almost impossible for you to lose all your money. And if you were to lose all your money, you know, we'd probably have more concerns than just that. I think on a society base. So, you know, if you look at the last 50, 60 years, if you invest in the stock market, on average, you've made, I think it's like 9 or 10% returns every single year. If you think about that, over 6 or 7 years, you're going to double your money. So if you're putting, you know, money in every single month, it's just going to keep growing and growing and growing. And it's, you know, I mentioned a lot, it's compounding. You're going to get to the point where in the future, when you do want to retire, you've put that money aside, you've been smart about it, and, you know, you're going to enjoy it in the future.
Yeah, I think you summarized quite well, like the mindset everyone should have at a very early age. And another myth that we didn't discuss, but also like, should I have to spend all my day in front of the screen? You know, can you explain a little bit what maybe those days traders are doing? People who are really speculating, staying in position for a couple of hours until a couple of days maybe, and people who have more long-term vision and who would say, I buy stocks that are maybe undervalued, as you say. I buy ETF that I know I'm going to be exposed to different verticals, right? Different location. And then finally I see and I check the chart maybe like what, once a month, once per quarter, and then I just see the big picture and just see how the trend is growing. Can you discuss it a bit about that?
Yeah, and I'd say for most people, that's the perfect way to look at it. You know, you're investing for the long term. You're not looking at the screen every single day. You're, as you said, and we might talk about this a bit more later, but you're sort of putting, you know, your money in an ETF, something that's quite diversified. You know, you might put, let's say in the UK, £100 a month, which you know, for most people, it was quite affordable. You know, you put that into an ETF and you just put that in every single month. You don't worry about it. You're putting it away. It's for your future, basically. And I think that's the way that most people should do it. You know, you mentioned there sort of day trading. For most people, you know, it's the classic stat. I think 98% of people lose money by day trading, because the shorter you go in terms of trading, the more riskier it is, obviously. And then the more it's not based on value, it's more based on you know, technical analysis, and it's basically based on statistics. I interviewed someone recently. He was a rocket scientist from NASA, and he's a day trader now. And basically what he was saying is it's all based on numbers. You know, as long as you're making, you know, you're winning more than 50% of the time and you have certain risk management, then you're going to do well. But for most people, that, you know, you don't need that stress. And that's what it is. It's stress. You know, you wake up in the middle of the night and you're looking at your phone, you're looking at the charts, and it's just not what's right for most people. And yeah, that's what I would say. Unless you're looking to go professionally and you want to be maybe a trader full time, then okay, you can do that. But what I recommend is put the time and the effort in beforehand. Don't put your money in straight away, because, you know, if you're one of the 98% of people, you're just going to lose your money straight away. What you want to do is you want to do your research. You want to maybe open up a demo account, which is, you know, it's basically the exact same as trading, but it's not money, it's fake money. And that's what I'd recommend if you do want to go down that, you know, day trading or even swing trading, which is more trading over a few weeks. Just, you know, put the time in, put the effort in, put 6 months of, you know, an hour or 2 hours a day, which I know is a lot for a lot of people, but if you really want to be successful at this, it's what you have to do in anything in life. So that's what I recommend. But for most people, that's too much. You know, you're working a full-time job, you get home, you don't want to be looking at the charts. You want to be, you know, watching a movie or, you know, spending time with your family. So for most people, it's fine just to put their money aside into an ETF, into an index fund, and just, you know, don't think about it.
Okay, yeah, interesting. So you have this mindset of the people who just think about short-term gain. We have recently all these trends of crypto enthusiasts, NFT as well. So I'm not saying you shouldn't like invest into that, because probably in the future there will be more and more acceptance from governments, from big authorities, and even maybe big banks, right, or big countries will just decide to go to that direction of opening their own e-currency. But it's right now more something that I would think more on the gambling aspect, or more like short-term gains, even if of course you can still do some long-term investments, and every month you buy, I don't know, $50 of Bitcoin, and you keep it for your retirement plan if one day Bitcoin really become something big. But yeah, I would like more to focus together about more the long term, and how do you build efficient portfolio, and portfolio that have been there and out there for decades. And maybe we can quote Ray Dalio, right, who is like an investor. He built a fund in the US, and he's a billionaire, right? And he just invested money like surfing trends, surfing different cycles of the economy. And he also built a portfolio called the all-weather portfolio. So basically the portfolio that can resist to anything. And that's more, I think, the direction you should have a look if you want to think long-term, and want to think you don't necessarily want to rely on wealth managers, but you want to start to secure your saving and be in control of your investments. Can you, Anthony, discuss and explain us a little bit what are those like all-weather portfolio or permanent portfolio that wealth manager or those research people have been building over the last decade?
Yeah, definitely. And what I would say is, not one, everyone's different. It depends on people's circumstances. It depends on people's age. It depends on people, how much risk they want to have. So for myself, I'm a bit younger. I might be willing to have a bit more risk because I know, fingers crossed, that I'll have, 30 years of working, probably more actually. But for me, I don't mind taking a bit more risk. But if you're a bit older, maybe 40, 50, you're getting a bit close to retirement, you don't want to have as much risk. You don't want to get to the point where you could lose, quite a little bit of your portfolio because you've risked too much. So I think that's quite key. It's looking about, okay, how long am I going to be investing for? Will I be investing for 30, 40, 50 years? Or is it going to be 20, 30 years until I have to, start withdrawing to sort of pay for my retirement if I want to start working? So I think that's quite key. What I would say is I've looked at the Ray Dalio portfolio, and I think it is, I don't know if I'd invest in that personally because it has, 30% equities, so 30% shares, 15% commodities, I think, and then 65% bonds, or 55% bonds, sorry. So for what we're seeing at the moment in the US especially is that the actual rate of inflation is higher than, the interest you get paid for the bonds. So basically you're losing money for investing in those bonds, which for me, I just don't see as something that's sustainable. And for most people, even if you're 40 and you're going to retire in 20 years, I personally think that you're better off putting a bigger percentage of your portfolio into shares to get higher returns. Because, if you look at the market, as I was saying before, it's, on average, you're going to be making 9 to 10% a year. Whereas if you have your money in bonds, it's going to be only 2%. So that's what I'd say. I wouldn't have as much in bonds personally. I'd probably have, and this is probably just my risk because, I'm willing to have a bit more risk. I'd probably have at least 60 to 70% of my portfolio into equities, and then probably 5% in crypto. Because for me, it's something that over the long term, I think it is going to be quite big. And, we've seen Vietnam, I think, is one of the highest adoption rates of crypto, which is pretty crazy. But you just look at it, it is going to be something that's quite large in the future, in my personal opinion. So, and I'm willing to have higher risk. For some people, it might just be 1%. But I think it is quite important to have, that diversification. And what I'll be saying now is sort of you want not just diversification of assets, you want diversification of regions as well. So, you want to have potentially and this is maybe getting a bit more complex and for people who want, a bit more maybe risk as well, because, you want potentially ETFs in the US, there's ETFs in Europe as well. And then you want access to sort of Asia because, emerging markets and, frontier markets like Cambodia and Vietnam, because we're seeing the growth in Vietnam. It's almost astronomical. Like even last year, 1.5%, which I think, or 2% GDP growth, which is the best in the world. And, we're seeing Vietnam has really benefited from, there's the US-China trade war. So a lot of the manufacturers have, and I think we talked about this last time, a lot of the manufacturers have moved to Vietnam. And that's just going to help, it's going to help increase the wages of all the people in Vietnam. From there, there's going to be more, these people are making more money. So they want to live a better life. They're going to want to have more services. They want to go out to restaurants, go on holidays, do all these things that, most middle-class people do. And the more that happens, the larger the growth is going to be. And I think what we're going to see, the major growth is going to be in, in frontier countries like Vietnam, like Cambodia, emerging markets like India as well, where the markets are, they're quite open, they're quite free, and the regulation is good. We're seeing what happens in China, in China with, if you become too regulated and they're sort of regulating a lot of companies, the stocks are going down massively. So, foreign investors aren't trusting it as much. So I think that's quite important, having a diversification over regions, as well as having diversification over assets. But, for most people, that's probably not needed. You're probably fine to, buy an ETF that's just in the US or just in the UK, and just holding that. And it's easy. You pay a low fee. A lot of times it's 1% or less a year. And you can just keep putting money in every single month and then hold that for 30, 40 years. And then, once you learn more, then you can sort of decide, okay, do I want to invest in in these emerging markets and frontier markets, just to, maybe 5 or 10% of your portfolio, and it could be massive for you.
Mm-hmm. Yeah, I think you summarize well, Anthony. It's like most of your portfolio should be dedicated for something that you trust. Let's say, for instance, you invest in the US through ETF. The opportunity you have and the advantage of using ETF is that you can be geo-diversified in terms of location, but also in terms of type of ETF. For instance, you can have ETF that are investing into real estate. So instead of owning directly the real estate, you can invest in an ETF that we also call REIT. So it's just share of companies that are working in the real estate sector. So it's the same if you were owning the property somehow. You don't really own it, but because you invest into those companies, you can surf and have the growth of those sectors. You have also other ETF that will be for commodities. So let's say if you are a digital nomad, if you are moving around, or if you are, again, like not necessarily settled in the countries, you can own gold somehow, but this gold, you can buy it through an ETF, and you will, as Anthony said, you will have a small fees every year, just because those wealth managers, not because those fund managers who are taking care of this ETF going to take a small fee, but it allows you to just be, again, diversified in different class of assets, but you are still in the end owning and developing those kind of portfolio by diversification. And then, as Anthony mentioned, you can, after, when you have a little bit of saving on the side and you want to take more risks, then you can consider cryptos, you can consider frontier markets. And then I think it's more something that will come on the after, having something that is already structured, that a long-term plan that is already there. And then every month you don't really think what you have to do, you just invest automatically in those, for instance, ETF diversified portfolios. And then on the side, you're going to take more risks and more risky investment. So I think, yeah, you gave the good illustration, Anthony, about this.
Yeah, perfect. Can I add something else?
Yeah.
I think one thing that's vital as well is there's never been a better time to invest. Like if you look at the past, a lot of the tools that we have now, retail investors like ourselves would never have access to, or they would have been very expensive. It was only the big institutions and where the big money. So what's really happened is that because there's all these, there's all this competition now, they're really pushing the price down of how much it actually costs to invest. So, there's never been a better time. And the benefit of being, investing in an ETF is, if we look at the UK market, 70% of stocks underperform the market. So, if you're just investing in an individual stock, most of them aren't going to do better than the market in general. What's really, benefiting it is that there's the massive stocks that are having massive returns. They're really growing the market. And that's where, that's what the benefit of having an ETF is, that you have access to these. It could be hundreds, it could be 500 different companies, and you're benefiting from all of them. So, you look in the US, the 500 S&P 500, 4 companies or 5 companies have over 20% of the whole, of the whole sort of value of the top 500 companies. So basically, if you own the S&P 500, you really benefited from the growth of Amazon, Google, Facebook, and Microsoft. And that's where the major growth has come from. Whereas if you invested in, individual stocks, then there's much more likely chance that you're not going to succeed. So I think that's where the real value is, that, you have access to all these different stocks, and you're really going to, even if one doesn't do as well, you're going to really benefit from the ones that massively grow.
Interesting, Anthony. Okay, very, very good. And then, because you have a YouTube channel as well, and you interview how many, 50 plus people into finance, I had this question. Did you find patterns in those people? Did you find, I don't know, lessons or things that they show you that you find, oh, all those people are thinking this way? Can you share a bit about this experience into developing that YouTube channel and then getting knowledge directly from people who are doing like trading or investing every day?
Yeah, definitely. And I'd say that obviously the people that I interview, they're all in different asset class. They're in different levels of investing. So some of them are CEOs of big companies, and others are just, retail investors that do it themselves. So they all sort of have their different pieces of advices. But the one that I've heard the most is, you just start. At the end of the day, it doesn't matter how much money, all of us have different situations. I'm a uni student. I don't have that much money each month to invest, but, you just have to start, and you just have to, even if it's £5-10 or, 5 or 10 euros a month or whatever, just start putting in a little bit of money. And it could be, really simple. It could just be an index fund. But if you start, it forms positive habits. And then, once let's say you graduate, or once you sort of start getting into higher paying jobs, then you can start putting more money in, and you've built that habit of each month putting a certain, a small amount or a little bit into the markets. And, for most people, if they could invest 5-10% of their income into the markets. And what I've heard a lot is, have your savings put aside first, and then have your spending money. And a lot of people do it the other way. They have their spending money, and then they're like, okay, I'll save whatever's left, and then they spend it all. It's like, no, don't do that. Obviously do what you think's right. But I would recommend saving first, or investing first, and then have the rest of the money to spend. So that's sort of one of the points. And the second point is just time. Be patient. A lot of the benefits from the markets are compounding. So, it grows exponentially over time, and that just comes with time. With time, as I said. So, think about long term. Don't think about short term. So many people, we all want to be wealthy quickly, and I've been in that trap where you just want to make as much money as quickly as possible, and you just take risks that are ridiculous, and then you're so much more likely to lose all your money rather than become wealthy. There's a few people who do be successful, but for 99.99% of the population, that's not going to happen. And you don't hear about all the people who fail. So that's what I'd say. Just be patient. Understand that we're in it for the long game. Most of us, fingers crossed, touch wood, are going to be here when we're 60, 70. So we need to prepare for that for our life. We don't want to be working for 80, 90 years of our life. That's ridiculous. So we're going to be living for longer. We need to look after ourselves. And at the end of the day, I'm really a proponent of you can't trust the government. You can't trust others. As much as they look after us, it can just be an instant where they take all the protection away. So you need to make sure that you're, looking after yourself, and you're making sure that, if anything happens, you're prepared. Diversification, as I said before, is key message from them, and over assets, as I said before, over asset classes, over different geographies. Just because we're seeing in China at the moment, there's a massive debt issue with a company called Evergrande, which is a real estate company. If something were to happen in China and the market crashes, okay, you might have a small amount invested there, but you have money in the US as well. You have shares in the US, you have shares in the UK. So it's only a small amount of your portfolio. And I think it's quite key to make sure you diversify that way. So those are probably the major things that I've learned. And another thing is just enjoy it. It's most people are really fascinated by the markets. They're really interested, and just, put the research in, and don't get too stressed about it, because sometimes we can stress a lot about money, but at the end of the day, just understand over a long term, it's the markets go up. That's, obviously past performance isn't representative of future performance, but they go up. And unless something massive happens to the world, I'm sure they will still continue to go up in the next 10, 20, 30 years.
Okay, interesting. Yeah, so get started as soon as possible. If you didn't at least buy your first stock, try with paper trading. Anthony mentioned it before, so do your first trial. Now we have easy access with all those crypto and NFT industries. So also have a look. If you have a personal, something that you like, you can buy your first NFT. It's going to cost you just a little bit of money, but at least you get started. You learn about this whole ecosystem of investing. And then after a couple of months doing it, maybe you'll be more comfortable. Maybe you'll be more willing to invest your own savings. And then, as Anthony said, it's a long game. It's a long journey. So just enjoy this journey. Enjoy learning about this. And then I'm sure in the next couple of months, years, you'll be happy that you got those key information. It's really something that is you have 100% control on. And then after, you can balance and take less risky investments, and then be more secure for your future.
Yeah, and what I'd say with NFTs and cryptos as well is do your research. Don't, if someone tells you, oh, this is going to go to the moon, they say this is going to go up drastically, take a step back. Don't FOMO in. Don't just be like, oh, okay, I don't want to miss out, I'm just going to put like all this money in. No, just take a step back, do some research, spend a few days just looking at it. Like, okay, what is this thing? Because I've done it before, and I think we've all done it, where we're like, oh, this is the next big thing, I've heard about it, I'm just going to put some money in. And then it just crashes, and it was a mistake. And I did that. I'm in the NFT market as well. I did that as well. I'm like, oh, there's an NFT, I'm going to buy it. And I didn't realize that there was all these issues with it. And now I've basically lost all my money from that. So luckily I did well on others, but so it's so easy to do, but just take a step back, take a deep breath and do a little bit of research. It doesn't have to be, weeks and weeks. It could be an hour here or there, and then take the step.
Okay, cool, Anthony. Thank you for your sharing. Don't forget to check in the description, and you will have the link of Anthony's channel. So if you want to learn more about investment, Anthony interviewed more than 50 people on his channel. So have a look, and you'll have a lot of content out there if you want to learn more about investment. Also, don't forget to leave a comment below. Ask Anthony any question. I'm sure he will be there and he will answer you about your questions. If you enjoyed the video, thumbs up as usual, and I see you in the next video. Thank you, Anthony.
Thanks.
Bye-bye.
We appreciate it.
Bye.
Bye.
And I'ma get it right, dead on sight like